Hooty hoo, all my stock market gamblers. Welcome today. Today's Wednesday. We got May 26th. Now, what's going on in the markets is, well, Dow's up about 50, Nasdaq's up about 50 points. Not really much. Kind of complacent, kind of just moving along, kind of a consolidation. Okay, so what I want to talk today about is a stock market crash just around the corner? Now, what is a stock market crash? Well, we'd have to go into a bear market. Now, a bear market happens on average every 5 years. Now, we haven't had a bear market in the last 12 going on almost 13 years now. Now, if you're a millennial, let's say you've been trading the last decade, let's say you're 30 years old. When you started trading when you were 18. You have never seen a bear market. You've only seen the market going up. Only going up. Now, once again, bear market happens every 5 years. A bear market is defined by a pullback or a crash, if you will, of at least 20%, usually averages around 35%, and sometimes gets up to as much as 50 or 60%. Now, will we have this crash? Is this crash going to come? Or can we have another 12 years of straight up in the stock market? Well, what has brought the stock market straight up for 12 years? Is it the economy? Is the economy doing really well? No, it's not. What has made the stock market go up for 12 years in a row? It's called quantitative easing. 1, 2, 3, 4, 5, 6, 7, 8. I don't know how much they quantitative ease, but what is that? It is the printing of money. And what are we continuing to do? We're continuing to print money with stimulus, with unemployment, extra unemployment benefits. The money isn't there. We have to print that money, and this money has to flow somewhere. It has to flow into the stock market. Now, what is the printing of money? What has it done? Well, the printing of money can cause what's known as inflation. Inflation means that the money supply has expanded, and so you have more money chasing the same amount, or in our situation in the U.S., even a smaller amount of goods and services. We have a smaller amount because people are getting paid to stay at home, to sit on their butt. Now, nothing wrong with that. Take the extra unemployment, I say, as long as the government's dumb enough to give it to you. Okay, so we got fewer products with more money chasing it, and we have inflation coming. Now, why is inflation bad for the stock market? Why is it bad? Well, now the stock market can run alongside of inflation. It can inflate right up with inflation. But in the market we have today, it's very different. Very different. Why will inflation crash the stock market? Well, okay, the government admits that we're running about 4% inflation right now. Now, 4% is very conservative. I would say it's well over 10%. If you don't believe me, just go to the gas station, go to the grocery store, look at your rent payment. These are going up more than 10% a year. Imports that government admits have gone up 8% in the past year. That's the stuff we import from China. Now, when we stimulate the economy with the stimulus checks, it doesn't stimulate our economy because we're not producing anything. Whose economy does it stimulate? It stimulates China's economy, the import economy. So the imports have gone up at 8% over the last year. That's what the government admits. I think that number is much higher. So we do have inflation coming. But here's the thing. When we get this inflation, when the government starts to realize, oh crap, we have inflation. Inflation, once it starts, is very hard to get rid of. It can become runaway inflation, also known as hyperinflation. But what happens when we get this inflation? What does the government have to do? Well, they have to stop printing money, because what causes inflation? Printing money. If they print more money, that inflation will become hyperinflation, and hyperinflation will destroy a country. So the government has to stop printing money. What happens when they stop printing money? Well, the whole stock market's going to come crashing down. This is why I say the crash is just around the corner, because the government is going to have to stop printing money. Now, our government is making incredible mistakes right now. Okay, the Federal Reserve is printing about $120 billion a month. Now, what do they do with that money? This is just the Federal Reserve. This isn't Biden. This isn't Janet Yellen in the Treasury. The Federal Reserve prints $120 billion a month, and they go about and they buy treasuries. They buy these mortgage-backed securities to prop up the housing market, to prop up the stock market. And what we have is a lot of debt. So they take on debt. They're $8 trillion on their balance sheet. Now they're going to double that to 15, 16, 20 trillion dollars. But now, this also, we got the Treasury. We got Biden, right? We got Biden. He already printed the $2 trillion stimulus package. He wants the $4 trillion infrastructure package. And by there'll be another $2 trillion stimulus package. So that's $8 trillion there. You get another couple trillion over in the Fed. You got $10 trillion in 1 year. Now, it's fascinating. Okay, when I went to school economics, I was an economist major, and I learned a lot. But, they never talked about negative interest rates. They never talked about UBI, Universal Basic Income, where we just get that helicopter money flying out there and giving it away to people. We never talked about that stuff because that stuff was unheard of. Now, let's say 50 years from now, when we look at this time in history, what are the economics teachers going to be saying? They're going to be saying, oh my God, how could you not have seen the crash coming? How could you not? Look at you. $5-10 trillion a year and just throw it out there as helicopter money, you're going to have a problem. You're going to have a crash in the market. Okay, so what do we got? We got this debt bubble exploding, right? Okay, so we got government debt that's at a record high, but we have corporate debt that's at a record high. We even have personal debt that's at a record high. Now, the one that scares me and the one that is a telltale sign for the market is the margin debt. Margin debt is at a record high, almost $1 trillion in margin debt. Now, when people get a margin call, what happens? They have to sell. They have to sell their stocks. So this puts pressure on the stock market, and it will come crashing down. So we got margin debt at a record high, and it's going to send the stock market lower. Now, when I say just around the corner, what am I talking about? Is it going to happen next week? It could happen next week, but I do think it's going to happen in the next 3 or 4 months. I think in the next 3 or 4 months, the market crash is imminent. Now, I would not short this market until the moving averages come down below their 50-day. Right now, the QQQ, the SPY, and the DIA, they're all trading above their 50-day. So we're going higher. But I'm telling you, this inflation, this helicopter money is going to bring the stock market down. Now look, the wealth inequality is at a record high. Never before in the history of the United States have so few people owned so much wealth at the expense of so many. Now people think that they want to print more money. The politicians, they want to help the poor people, right? So they say we got to print more money to help the poor people. Printing money does not help the poor people. It hurts the poor people. The printing of money helps the billionaires. The money flows to the billionaires, and the poor people get stuck with the bill being higher prices. Higher prices is a tax. It's a confiscation of your money. We have inflation, and inflation is going to bring down this stock market. Now, do I think it's going to happen this week or next week? Probably not. Do I think it's going to happen in the next 3 or 4 months? Absolutely, I do. I think it's going to happen relatively soon. Relatively soon will be over the summer here. We will see a stock market, bear market, more than 20%, and the crash could continue to 30, 40, 50, even 60%. A crash, when you get the bear market takes about 1 year to play out, sometimes as long as a year and a half. So from where we are now, let's say call it 34,400 on the Dow, 34,400 on the Dow. Now it will take probably about a year until we get down to 17,000 on the Dow. Could we go lower? Could we overshoot to the downside? Absolutely, we could overshoot to the downside. Why can we overshoot to the downside? Because we haven't had a bear market in the last 12 years. No bear market. Bear market happens every 5 years. Bear markets are actually good. It flushes out the zombie companies. There's a lot of zombie companies out there that should not be in business right now because they cannot even pay their interest on their debt with their cash flow. These are zombie companies. It will wipe them out. It will clean out the system. We will get this pullback. It's going to happen. Prepare yourself for it. Be careful out there. Be cautious right now. Look, at bear markets happen. Bear markets are actually a good thing. They flush out the zombie companies and it takes that capital and reallocates that capital to the good companies, the companies that actually make money, that actually have a good business model. Every bear market is followed by a bull market, but a bear market is coming. Now, I see these guys on YouTube, the millennials, they think this can only go up forever and ever. They don't think that there's going to be a bear market. They think there's no way this market is ever going to go down. Well, we'll see who's right. We'll see who's right. I bet I get this one right. Anyways, if you like this stuff, give me the thumbs up. I'm Tall Mike. Punch the subscribe button. We'll talk again real soon. Bye-bye now.